Good afternoon and welcome to this week's edition of Halftime Talk. The new season 2023 has got underway and we're delighted to welcome Marc Howson, Head of Asia for Welligence Energy Analytics, to the table. Welcome, Marc.
Thanks, Sean. Great to see you again.
We start the new year with, I think, LNG very present in our front. I was going to say rear view mirror, yes, because it was such a dominant theme of 2022. But one of the dominant themes to continue into 2023 does feel like LNG, mainly because the reopening in Asia. Some would say the energy crisis in Europe is over for all sorts of reasons, but others would say not so fast. China is reopening and they love their LNG. Your thoughts on the reopening of China and what it means for the global LNG markets?
Thanks, Sean. You're right. China's obviously a huge topic in 2023. To me, what's also very helpful is just to think back about exactly what happened in 2022. Because to me, in 2022, we had three things coming together. We obviously had a cyclical factor, which is the lack of new final investment decisions on LNG liquefaction projects 5 years ago. And that meant that the growth in LNG supply in 2022 was very muted on a global basis versus 2021. So we had a kind of cyclical tightness in the market. And then, of course, we had a big shock in terms of the Ukraine invasion and then the subsequent very dramatic fall off in Russian pipe gas into Europe. By the time we got to the end of last year, pipe volumes from Russia into Europe were only about 10% of what they were at the beginning of 2022. So we had this shock, and then also the shock brings the huge structural shift in the marketplace, which is a vastly reduced reliance on Russian gas by their biggest customer, Europe, obviously not only into 2023, but kind of further along the time period ahead of that. So you have the cyclical challenge, the shock, and also the kind of structural implications, which obviously spooked the market and sent prices particularly high in August time. And since they've come down, obviously, with the kind of mild weather. We had a shock in the LNG business, arguably comparable in 2011 with Fukushima in Japan. And obviously Japan was the biggest LNG market then. But the difference was there was sufficient LNG supply in the system. It was still ramping up, particularly from Qatar, which was ramping up their Qatargas, Train 7, etc. And that increased supply, flexible supply, allowed the world to deal with Fukushima. Russia invasion of Ukraine is obviously a very different scale to that. So now if we think forward to 2023, you're right. For the first time, basically since 2015, Asian LNG demand, and Asia is typically the main driver of LNG demand, accounts for the vast majority of it, actually fell significantly last year. It was down around 7% year on year, and in particular, China had their LNG demand reduced by actually almost 20% year on year. And you're right, one of the key reasons for that was clearly the COVID-related lockdowns, but also the price sensitivity across Asia, not only China, but India, Pakistan, Bangladesh. All their LNG demand was down between 15 and 20% year on year. So if we look into next year, what we see is very
next year
little
being
new
2023
supply. Exactly, sorry, 2023, you're right. Very little new supply, which tells me prices are going to likely remain elevated when we speak to market participants, which tells me the price sensitive Asian markets are still not going to be able to vastly increase their amount of LNG.
Even China?
Those markets in South Asia. And then China, most players we speak to in the market expect it to be a fairly bumpy reopening in China in terms of either the regulations, restrictions around the lockdown, but also just on behalf of the populations there. Are they going to be ready to travel like they were traveling pre-COVID and drive demand both for domestic travel and overseas
travel?
They're
still diverting LNG cargoes to Europe. the
Exactly
Chinese.
right. Exactly right. Exactly right. So we do see growth in Chinese demand this year, but unlikely to go back to the strong rates of growth we saw at the end of last decade.
I mean, in some ways, Mark, or in many ways, we're still working our way through some big disruption moments, obviously, COVID and then the Ukraine war. And as we go into 23, we're still navigating what these ramifications are, and will we revert to trend? We had the Minister of Energy of Qatar over the last few days saying that he believes Europe will go back to Russian gas eventually, more when rather than if. I'm just wondering from your perspective, as we look forward with the three major LNG producers in the world now, Australia, Qatar, and the US, uh, will we see, are these new established new flows going to bed in, anchor in, lock in, or are they going to reverse to sort of the trend of the 10 years pre-Ukraine, pre-COVID?
When we speak to players in the market, Sean, players think this is a structural shift, particularly in terms of European LNG demand. European LNG demand surpassed 100 million tons last year, which was about a 60% increase year on year versus 2021. And if you just look at the amount of infrastructure for LNG that's being built around Europe, and Germany's the best case, they have 6 regas facilities that they're planning to start up, over the course of this year and next. 2 of them are already in place. Finland has installed their first LNG FSRU, and many are likely around the continent in new countries like Estonia, potentially Cyprus, but also in existing importers like the Netherlands. So we see increased reliance on LNG in Europe, where Europe continues to import a small degree of Russian gas potentially, but certainly players we speak to don't expect that to go back to anywhere like the levels that we saw in
And would
2021.
that be like Russia has been the pipeline obvious gas supplier to Europe for decades? Will now the US be the US LNG be the obvious supplier? Obviously, seems like the big winner from 2022, but moving forward, does it continue to dominate this opportunity of European LNG?
Exactly. If you look back to 2022, you're right. The vast majority of that incremental supply came from the United States. United States supplied around 45% of LNG into Europe last year. If you look at where the growth in LNG supply is coming from, particularly over the next 10 years, it's really dominated by the United States. Next year, there's not a huge amount of incremental LNG supply coming out of the US, but remember, certain large projects like their Freeport LNG projects have been shut down since June. We expect them to resume production this year. So the United States is going to be a huge contributor increasingly to the supply balance, but also, of course, Qatar. Now, Qatar is planning to add almost another 50 million tons of LNG by the time we get to 2028 from their 2 expansion projects. And in addition to the US and Qatar, the other big LNG frontier that's going to provide more security of supply is East Africa. We've already seen the first production from the floating LNG in Mozambique, Coral,
Mozambique, yeah.
start up last year, and then there's an onshore Mozambique LNG plant that may reach final investment decision
Is there a sense
and
of
start
what
production.
volumes will eventually come out of East Africa?
The volumes are likely to be very significant. The Coral project's around 3.4 million tons in terms of capacity, and then the onshore project that's under construction is another around about 13 million tons. So we could easily get over 15 million tons over the next few years. And then there are a number of other projects. There's another onshore project, another floating LNG project proposed just in Mozambique alone. And when you add on to that, the vast potential Tanzania has as well, with their unmonetized gas reserves. It's unlikely to get to the level of a US or Qatar, but they could certainly compete with some of the other large LNG
I
exporters.
mean, when you look at those sort of that question of bedding in for this that structural change, I mean,
Mm.
a lot of that sort of shift of 2022 and even what we've seen in recent years pre-COVID into Asia has all been on floating regasification units, this sort of uncertain outcome. Nobody seems to be investing in that fixed long-term onshore regasification play, give obviously the cost, but the Europeans themselves are weak in signaling their long-term intent to take more gas.
There are a couple of factors we see in the market. I mean, it's true what you say to a degree, Sean. I think the primary driver for this, huge explosion of interest in FSRU, so floating regas terminals, is just the quickness you can bring them on. I mean, Germany started their first project in December, and it was only obviously proposed off the back of the Ukraine war, which started in February. So it's around about a kind of 9 month ability now to get a project in place from first proposal. It's also a relatively low capex, upfront capex exercise, because you kind of don't have to build quite as much storage infrastructure onshore as well. And then let's not forget as well the supply side, Sean, in terms of this kind of trend towards floating facilities. Huge amount of increased interest in that, and in particular, floating LNG terminals in Africa. We've seen a large amount of interest. We've seen obviously Coral startup last year, and then there's another project, one of the few projects in the world that will add more supply in 2023 in Mauritania. There's also another proposed floating project in the Leviathan field in Israel, and a third one in Malaysia as
I mean,
well.
is there even the construction capacity for that number of floating FSRUs? I mean, they may be available at short-term notice, but they do take a long time to build, and they are expensive
Exactly,
to lease.
exactly right, and that's the key bottleneck at the moment. The yards in Asia are pretty packed out in terms of converting either traditional LNG carriers to floating facilities. But there are a couple of facilities that were deployed elsewhere in the world. The Tango LNG facility, which was kind of in Argentina, that's now shifting to Congo. So there are potential for moving facilities around, but like you say, there does need to be a big increase in production as
Just
well.
looking at the big picture on pricing, obviously we've seen gas prices in Europe and the US correct significantly and quite quickly downward. Is this a calm between the storms, if you like? What's your own outlook for gas and LNG pricing through 2023?
When we speak to players in the market, Sean, there's clearly a huge amount of uncertainty as to how it will pan out. When we look at our balances on a supply demand basis, the supply is very minimal in terms of new LNG supply startups expected next year. And we've spoken about China kind of slowly reopening as well. And a combination of those is predominantly why we expect prices to remain elevated last year. There's a particularly warm winter in Europe at the moment, which is obviously the main driver behind this recent fall in prices. But we don't see any big relief. Obviously, we don't see a quick resolution to the Ukraine situation and the resumption of Russian gas into Europe. So we do expect further tightening, ongoing tightening in the market over the course of 2023.
But not dramatically so. I mean, the expectation that China could be a sort of a structural shift back to the highs of last year, unlikely.
Yeah, exactly right. I think what will limit prices, certainly here in Asia, when I speak to our clients in this part of the world, is the price sensitive nature of more the emerging Asian LNG countries, Pakistan, Bangladesh, and India as well has obviously been importing for a long time, but that's another very price sensitive market. And increasingly, unfortunately for the world, a lot of these countries are boosting their imports of coal, and Thailand's another good example of that. Coal usage grew obviously last year, and not only in Europe but also in Asia. And all of those countries I mentioned do find that the LNG prices particularly high, and it's obviously very difficult for them to get gas from alternative sources. There are not a huge amount of new domestic gas fields that are being discovered there to boost their indigenous production. And there's a real lack of cross-border pipeline infrastructure as well across a lot of South Asia and Southeast Asia. So if these importing nations can't afford the LNG, they're generally turning to coal in terms of South Asia and Southeast Asia. In North Asia, Japan and Korea, it's often restarting nuclear facilities or building new nuclear facilities is how they're going to limit their LNG intake in face of very high prices.
If we just sort of wrap up with that point, looking at the rest of Asia beyond China, obviously the world is very focused on the outcome and the progress of China's reopening. What does it mean for the rest of Asia? Is it good news? Is it bad news? Competition for all the resources that they also depend on, but yet a big market. How do you think it plays out for the outlook for Asia beyond China over the year ahead?
So this is the impact in Asia of, I guess if you're a supplier of commodities, so in particular for LNG, whether it be Australia, Malaysia, or Indonesia, for example, like you say, if China reopens, that's a huge source of incremental demand on their relative doorstep. So that'll certainly push up prices significantly to the short-term benefit of the suppliers. However, if you are one of those price-sensitive competing markets, not only the ones we mentioned, but markets that have spoken a long time about trying to import LNG for the first time, whether it be a Philippines or a Vietnam as well, those countries are going to find it extremely tricky to do that in the near term if China really starts opening up and sucking in large volumes of LNG again. If China resumes their status as the world's #1 LNG importer, which of course last year they were surpassed by Japan for that title.
Well, we'll have to wrap it up there. It's been an absolute pleasure to have you on Halftime Talk this week. Thank you so much, Marc Howson, Head of Asia at Welligence Energy Analytics. Thank you, Marc.
Thanks, Sean.